Hello everyone, it is Sterling here from Day Trading Forex Live, and I am back for another month. If you guys have not been watching the month-end reviews, I would highly recommend going back and checking out those reviews. Starting in May of 2015, I began covering every live trade setup that every trade setup that we had, every valid trade setup. And what's really important to note about that, as I always say in these month-end reviews, these levels are pre-selected levels. Each day, members have access to what we term as a daily market preview, where I preview the exact manipulation points that I'm going to use down to the pip. The vast majority of these trades come from those predetermined levels. We do have criteria that allows us to identify new levels throughout the course of the day, and some of these trades, about probably 15 or 20%, are represented by new levels created throughout the course of the day. The creation of a new level has exact mechanical criteria, which is taught as well. So the bottom line is that these levels are pre-selected levels. They're known hours in advance, and most of them, the vast majority, are written in each night's daily market preview, where I pre-select these levels in a video format, show you the exact points I'll be trading from, and then what you're implementing once the market gets to those levels is what we term as the confirming entry. And the confirming entry, one of the nice parts about the confirming entry is the mechanical nature of the confirming entry. Everything about the confirming entry has a mechanical rule set to it, which is really critical, especially for those that are looking to learn how to trade. Discretion is often a new trader's worst enemy. While you can never rule out every aspect of discretion in trading, you can eliminate a large majority of it, and I believe that's something that both beginner traders as well as experienced traders should be looking at. There's a reason why banks pay people millions and millions of dollars to create automated programs. The fact is, mechanicalizing certain aspects of trading is a very important thing to do, and that's something that we've done for years with the confirming entry in the exact format. The confirming entry for close to 5 years now has not changed. The confirming entry is still the same. It still works the same. And it will continue to work the same because it's based off basic market functions. So let's go ahead and get into the month of September. To be honest, to start the month, September was probably my worst month of the year. I don't want to say probably. It, without a doubt, was my worst month of the year. We had a major reduction in the quantity of trades. We probably had close to a third of the trades that we normally have. So that was really unique for us. Not only did we have far less trades, but we also had a lower win-loss rate than we're typically used to. You take a month like July. July had a hit rate of close to 90%. 95%. If you were to take out the break-even trades during the month of July, it would have a 95% hit rate. We only had one losing trade during the month of July. That is rare as well, without a doubt. But this was definitely rare. It was rare because we just had far less trades, number one, and then also, again, that lower winning percentage. Even during a bad month, what I think this really illustrates, or what I consider a bad month, we still were profitable during this month overall with every trade included. And I think that's the real power, that's the real takeaway. So many times traders look at a strategy and they say, what is it capable of doing? They look at the potential upside and they never look at the potential downside. What's so important for traders to look at is not necessarily what is a strategy capable of doing. How big of a loss is this strategy capable of putting on me? How big of a loss do I have to bear before it digs itself out? And one of the things that the bank trading strategy does extremely well is it does a great job of protecting against downside. You will go through times where trading is boring, where we have less trades, no doubt about it. We will also go through times where we have losses. Again, no doubt about it. In every one of the profitable months prior to this, we have had losses. But what it does extremely well is it eliminates many bad setups, not going to eliminate them all, and it minimizes our losses. We never take huge drawdowns. When we take a drawdown, we often have a losing trade here, a losing trade there, but because of the risk reward associated with these setups, it allows us to have a, if we had a 50-50 hit rate, we would still be extremely profitable over the course of the month, and that is the real power of the setup. It allows us to be profitable even during some of the hardest trading times, some of the times that the market is performing in a way that is not perfectly suited to the bank trading strategy. The bank trading strategy is not designed to capitalize on extremely heavy trending markets. Now, a lot of people look at it and say, well, Sterling, why would you not want to capitalize on that? The percentage of the time that the market is heavily trending, when I say heavily trending, I mean day after day after day in one direction, and then turns around day after day after day in the other direction, that really heavy aggressive price action one side or the other, that type of market represents 10 to 15% of the total market. Now, the other 15% of the time is your gently sloping trend, and you're probably roughly 70% of the time the market is more range bound. So the bank trading strategy, it revolves around and really capitalizes in the best way in a more range bound market. Now, with that being said, this month is probably had some of the price action that is the hardest to be profitable with, and it was still profitable during that time. And again, I just think it speaks to the really robustness and the ability to be profitable in any market condition, in any market size through the month of, or through the year of 2014, where we had a market range of 40 to 50 pips, where breakout traders, where trend traders were absolutely getting demolished and blown up. We were still consistently profitable. And again, I don't care what type of market it is, not all markets will be the absolute best for the bank trading strategy, but even in the markets that it performs the worst in, it will still, more often than not, turn a profit. All right, let's go ahead and get into the first trade. The first trade was a euro short. It was from 1286. This was on the 2nd of August, so it was 1 day or 2 days into the month. It was from 1286. We had a deeper level up here. This is the level that was well over 20 pips from the next deeper point. It was a level that was, this happened to be a newly created level through the course of the day, a level that we didn't have established during the time of the preview. Came up, provided a confirmation of the downside, provided the pullback, and offered a full take profit there on the way to the downside. This pullback here missed the break-even stop by about 3 or 4 pips. Ultimately went down, ran to 4%. The euro on the same day, or the euro later in the day, I should say. So ultimately that second setup was a long from 1234. That was this level right here. And basically what we had was a stopper on that level, and we came up, created a break at that point, provided the pullback for the entry, and this thing came down a little bit further, continued to work its way up, showed from, depending on where the entry was, roughly 10-15 pips of profit. What we had was, we had a level that was just very simply not breaking. It was retesting on both sides, had a test over here. Ultimately we came up, we tested here, worked down, we came up, we tested again. This trade hit roughly, again, close to 15 or so pips in profit, came back up into that same level, into that same area, provided a break, started to confirm down, which is the point where I was moving to break even on the second test, being a bit afraid of that. Should have probably moved on the first test, but wanted to give it a shot once he got another break, another confirmation. That would have been the catalyst to move to break even. Ultimately ended up with a, again, coming back and tagging that break even point. Keeps us at 4% there on the start of the month. We go over to the next trade, which was the euro on the 4th. This was a euro long from 1092. Again, the level there was 1092. We come down and we get a break of that level. This was a very long candle count. If you understand the confirmation entry, it's a little more complex, but basically we came down and then we continued down, finally got the confirmation here, and then provided the pullback over the course of the next 2 candles, whatever pullback you would have wanted. Ultimately ended up hitting a full 4% trade. That takes it up to 8% on the month. We go to the next trade. It was another pound long. That pound long was from 52.26. That was that point right here. We had a break, we got our confirmation, we had the pullback on the next candle. This trade hit about 25 pips of profit, pretty straightforward, came back, tagged us break even, still sitting at 8% on the month. The next trading day was, or the next day was the 7th, which was the holiday, bank holiday, so we took that day off trading, and the following day was the 8th, and the next trade was on that day. It was on the pound, and it was from 54.02. 54.02 was again the level. This was a trade off a deeper level. I'm not going to technically count it because of the fact that it was a little more aggressive of a level, and again, why I'm not going to personally count it. You had your stop run, your confirmation down, again the pullback for the entry. For those of you that had the entry would have been right basically at the peak of this pullback, because that was exactly 15 pips from the high. Would have been the peak of that pullback right there at the 53.97 level. So from 97 down to the lows, this was the only other factor if you did take this trade, is that it hit roughly 51.5 or so pips of profit. Depending on your spread, it would have mattered whether you got hit for a full 4% take profit or hit for break even after that trade moved all the way back to the highs. So couple scenarios there. I'm gonna count or not count it as part of the trade count. Could have potentially been 4%, but again, not gonna count that, and that leaves us still at 8%. We had a bit of a dry spell. The next trade was a few days later, there on the 16th. It was our first or a losing trade on the month. It was the euro dollar long from 12.55. So basic entry here, stop run, confirmation, pullback for the entry, ultimately continued to the downside, stopped anybody out, takes you from plus 8% down to plus 6% on the month. The next trade was a pound long. This was on the 17th. It was a pound long from 55.18. Backside of the level setup here basically was a breakout point, had nothing stopping it above it. We came down, we created a break. We ultimately got a confirmation on this candle right here. Entry would have been at the open of this candle. And then the close was right before the news. The news is on this candle. Ultimately, from where the entry was, which was right here, to the news candle was roughly 2%, 20 pips, which on this was a 20 pip stop with 2% risk. So would have been roughly a 2% trade, takes us back to 8% on the month. Next trade, euro dollar long on the 18th. Again, during the New York session, 13.65. Really nice setup. I like this setup a lot. Just unfortunately had no follow through. Ended up being a losing trade here. Stop run, confirmation, pulls back here. Probably would have tagged a stop here, but if it didn't, you continued down, would have tagged the stop as it worked its way back to the downside here. Ultimately, that takes us back down to the 6% mark, up 6% there on the month. And then had a couple more losing trades. Like I said at the beginning, September was a knockdown month. It was kind of a month that was definitely a tough month. Was a lot of back and forth. Continuing to the next trade on the 28th was a euro short. This level was 12.09 to the upside. 12.09 was the level. Basic entry, stop run, confirmation, pullback. Pretty much stopped on the same candle. Again, taking us from 6% down to 4% there on the month. Then on the 29th, what we had is a pound short from 51.57. Again, that's 51.57. This is a nice backside of the level trade. This was a newly created level. Unfortunately, this newly created level produced a loss from the short. Ultimately, came up and hit a stop by a few pips, and then came back right to break even. Unfortunately, so a little unlucky, but quite frankly, that goes with the month. 51.57 was the level. Had the confirmation here, but we had news coming out later. So we actually took the secondary stop run and confirmation here, and the pullback was here for the entry. A little bit later, because of the news that we had coming out, waited till the news came out before taking the entry. And that was the pound short that later came up, tagged it by again a few pips, before ultimately coming back to the break-even point, which would have been our exit at 5 p.m. Just unfortunately, again, tagged us by a few pips before doing that. We continue on to the last trading day of the month, And the last trading day of the month, our level to the downside was down a bit further here. It was right at the 51.36.37 level. Really big level, really big breakout level to the downside. But what we had here was a break of this level, and then ultimately the market continues down. This one sets our lowest candle body. It becomes the new #1 candle. If you understand the confirmation entry, you understand why. And then the second candle confirmed up. Third candle, we couldn't take the entry. Fourth candle, we couldn't take the entry. The fifth candle was the news. So that's where we could take the entry, but we need the pullback now. And then as you can see, the news provided that pullback for the entry. Now this wasn't just a quick spike down. This was the 11:30 candle, which is 4:30 a.m. Eastern. I'm going to scroll into that on the 1 minute to just show you here. And we've had a few trades like this recently. This is not really all that uncommon. It's just, it's not super common, but it is a entry that includes one other variable, which is simply waiting for the news. In this case, the news spikes down, and you're taking the entry within 15 pips of the low, which means that anywhere around this cursor right here or below would be valid. Therefore, you could have taken it on the original pullback candle the next minute. So you were in this area for 1 minute, 2 minutes, 3 minutes, 4 minutes, technically in the area on any one of those four, actually 5 candles. But if you waited for the news candle to finish, the next four minutes or 4 candles, we're still in the entry area, and the same risk could be taken. This is actually a trade that I really like because of the fact that so often, especially the pound with UK data, the news will be used as a catalyst to get the price back to a previous turning point in the market. So this is actually a trade that I prefer to take. I like this type of setup quite a bit, where the market is spiking back down using the news candle as the retracement candle for the entry. And I like that because news, especially when it doesn't deviate, is used very often as a turning point in the market, or as a false push, and it is often reversed. And this is exactly what happened here. Turned around, ran to the upside, hit a full 4% take profit relatively quickly, and that takes us back to 6% there on the month. And that was a wrap on the trading day for the month of September. So, quite honestly, not a great month in the month of September. Had a very, very, very slow month. About a third of the trades that we typically have, maybe little less than half even. So maybe not quite a third, but a little less than half. And again, as I mentioned at the beginning of this video, what I think it really illustrates is kind of not necessarily the really strong potential of a market that is just hitting on one cylinder, or hitting on all cylinders, I should say, like the month of July. The month of July was a market that is optimized more for this type of strategy. That type of month is where you're going to have your big month. It had a 31% month overall on just the 2 pairs. Even in a month where the market is producing a type of market, a type of range that is not as conducive to stop hunt type trades, still going to maintain consistency, still going to be a profitable way of trading, and a protection against taking a big drawdown. So many times strategies, trend trading strategies, breakout strategies, indicator-based strategies, whatever the case may be, when they go through a downtime, they get absolutely beat up, they get absolutely demolished. You look at, again, as I mentioned at the beginning of this video, breakout traders, trend traders in the month or the year of 2014, they absolutely got obliterated by that market for month after month after month, because the market just was simply not conducive to that type of trading. And that's why I say the strategy, or a strategy's ability to keep you out of the downside, is probably the most important aspect of trading. It's often not who makes the most, but who loses the least. And that is such an important factor to remember when looking or analyzing a specific trading strategy. So again, another great month here. If you remember last month, if you haven't gone through last month, what I did is I broke out the calculator and I went through what the last 4 months of profit added up to. We had a month of May, which produced a 20% profit. So that brought us to 120, which would be a 20% gain on $100. We then added the month of June, which was a 12% gain, which brought it up to 134 or 34.4% gain. And then we had the month of July, which was a 31% gain. So 31% of 134 is 41.6, which brought it to a total right here of 176. In other words, a 76% gain. And then the month of August, which was a 9% gain, 9% of 176 is 15, which brings you to this total right here, which is 191.9, which is roughly a 92% gain over the course of those 4 months. Now we're going to add in this fifth month. So this fifth month will go plus 6% equals 203.4. So that brings us to now officially 103%. 103.4% that is. During that 5-month period, ultimately that averages out to roughly a compounded gain of 20% per month. Again, these numbers are compounded, so if you were just to take the simple numbers and add them together, it would not come to 203. This is a compounded gain. It really illustrates the power of compounding, illustrates, where would that be 3 years from now? Where would that be 5 years from now? As I always say, and I said in the last video, I'll probably say in every video, the time is going to pass. It's just a matter of where you're at in your trading progress at that specific time, because so many times people get caught up in the get-rich-quick mentality of trying to double, triple an account on a monthly basis, and they end up wiping out. They end up 1 year, 2 year, 3 years down the road, never changing that mentality, and unfortunately never getting anywhere with it. So hopefully this illustrates the power of safe, consistent compounding, adding to results consistently on a monthly basis, seeing what that does over the course of time, and trading like a professional rather than a gambler, and seeing the results that that type of trading can offer. So that is going to do it for this analysis of the month of September. I will see you all back for the month of October. We're at the very start of October right now, so it's going to be a little while, obviously. I look forward to seeing you guys then. If you want to learn more about the bank trading strategy, you can check out daytradingforexlive@gmail.com. And I would love to see you in the members area, in the live room, in the daily market preview video that we do every day, as well as the member forum, the member chat, and again, the lifetime support that comes along with that. So if you want to check that out, again, daytradingforexlive.com. And I'd be happy to answer any questions that you have. You can shoot me an email at daytradingforexlive@gmail.com or support@daytradingforexlive.com. Either one will get to me. Have a great month of October, and until next time, happy trading.